All right, welcome back to capitalcompetent.com. Today we're going to give a 10K challenge update. Okay, this is April 30th, so we're a third of the way through the year, and we're starting to deal with some money that can actually turn into more money. Okay, so what we're going to get through this video, we're going to go through some positions I've made and overall what's going on in the market and how you can better prepare yourself if we have more trouble to come. And basically, are we out of the woods yet? Okay, so let's updates. Just a reminder, this portfolio, if you want to follow along, right? 105 a week we're putting into this thing. Um, and half of it, or a little bit less than half, is going to go into index funds to give you that good base because that's some of the best financial advice you can get. Okay, now, that's boring. We want to learn, right? So we're going to take some risks, and we're going to try and outperform the market, but that is difficult to do, and you should always have a good base because once you get 100 shares of the S&P 500, life is easy. I've seen that in my other accounts. It's guaranteed 1 to 2K a month. It is amazing. Okay, also we're going to get into, are we out of the woods yet? We've seen a recovery, and we've seen some other stocks hit all-time high. Are is that sustainable? Is that right? Um, that is yet to be seen. But let's go over what the portfolio is looking like. Okay, we are up to almost 3,000. Okay, so 3,300. We're $500 off of our pace. $550 off our pace to hit that 10K goal in 1 year, which I still think is doable, especially now that we can take some risks. Okay, so I don't know what that is. We'll ignore this for now. Still new to putting all to these together and then just filming it right off the bat. But I like to make these videos when I have the inspiration to. Um, but still following the rules. We're 42% S&P. We're about 20% cash. And then if you see here, we bought our first option, which I will go through later. It is a put. It is a way out of the money put, so it's pretty risky. But the cost is only 10% of the portfolio. And if you closely monitor it, we will sell it if it goes under $2. So we're only risking 3% of the portfolio for potential double up. Okay. Let's go into the specific moves I've made over here. Bought more SPY. Okay, I went over this a little bit. This is the one of the safest investments you can do, right? America is the best company, or excuse me, is the best country. We have the best companies, we have the best technology, we have the best geographical location, we have the reserve currency, we have everything going for us. It's not going to lose its power and its dominance in the world just because of some tariffs. We've had tariffs before, we've had a pandemic, we've had wars, we've had terrorist attacks, right? It's going to take a lot of stuff, which can happen, but that's kind of losing your power takes time. It doesn't happen overnight. Um, by Adobe. Adobe, I'm starting a position in. I like where it's at right now, and if it goes lower, I will slowly build it. Because if you look, a lot of this world is based on attention. Who can get attention? Who can create the best marketing? If you have a really good product and you have a really good marketing, you will be successful. Number one, because if your product's good, it will spread word of mouth, and market penetration if you have good marketing. And Adobe is very key to that, and they have a recurring revenue that has just been consistently outperforming, and I really like that. So I actually bought just a measly $75, just 3% of the portfolio, because are we out of the woods yet? Um, I think that with gold, gold, gold's doing really well. We have bonds and the S&P. this portfolio is going to last a lot more than some of the other ones out there. Some of the ones that have Netflix and Tesla. I mean, if we hit a recession, those companies are going to go down so much. It's the ones that boost up the stock market. Once it turns the other way, I mean, you got Tesla trading at 160 PE, $1 trillion market cap, and they lost money, or they almost lost money this year. I mean, what's going it doesn't make sense. If they want to reach $1 trillion market cap, they have to sell 50,000 cars and have full self-driving in all of them, which is it makes no sense to me. Those type of companies are gonna fall. We're just gonna leave. Are we out of the woods yet? Okay. If we have a recession, right, this portfolio will not be as bad as those that are out there. And if you hedge it with this put, we have 42% of the portfolio in the S&P 500 in a market index. During recessions, during really bad recessions, you can take a look at this. This is Forbes. How stocks performed during the past 6 recessions. Well, 2008, when everything was said and done, 40% down. 2001, 38%. 1990, 26%. I mean, these are pretty serious declines. And with a lot more people coming into the market, it's only going to get worse. If we hit a recession, the S&P 500 and all these really high-flying companies are going to come down. People are going to budget and they're going to take their profits so that they can survive. The economy is going to stall. Now, is that a bad thing? Not in the short term. Okay, let's get into the meat and potatoes of this video. I will always, on these 10K, update on you this stuff, right? See how you're doing, see how I'm doing, see my thought process. I'll explain everything. I think Adobe's good. Ford is so cheap. Disney is 4%, and I think that they are not going to be Netflix, but they will come close. So only losing about $27. I am so fine with that. We still are mostly on oil. They provide 80% of America's energy. Pepsi is a consumer staple. Intel, that's a tracker share. If it gets below $17, I will add some, right? Mostly in here, everything I'm confident in. As soon as, and if you look at my last video did not do very well, but it was a really good video about cutting your losses, especially if you're starting to get into this, which I will show you how I do this and how to hedge, okay? We don't have enough money to do my big strategies, but I'm essentially doing it very small here. This is my biggest position. What happens if that goes down? Where is it? What happens if my biggest position goes down 40%? That is a ton. Well, you can hedge it, right? And I chose this date specifically because that's when the 90-day pause was. That was the catalyst for our little rally, is everyone took a big breath and was like, we have 90 days to figure this out. Okay? Now, we don't know if Trump is going to do another pause, but I know for a fact once that day comes, July 9th or July 8th, somewhere in July before this date, there will be a freak out and there will be mass selling. So this should at least double in value, maybe triple. We'll see. Okay, don't take my word on it. Not financial advice. This is just my personal opinion, and what makes sense and what I've seen in the market. Don't buy stuff because of um, what you hear on the internet. Listen to how confident I am. I put time and energy into this, and I convince myself through trial and error that this stuff will work. I have 4 different portfolios. I have my big one in Morgan Stanley, I have my trading one in Charles Schwab, I have an IRA, and I have this account. Okay, all of those I was able to build, and I'm going to show you how I do this one with this one. So follow along and don't pick stuff that I pick, but listen to how I pick it and how confident I am. And if I'm wrong, I assess. My last video was beautiful, but it didn't get that lot of attention. So if you want to look at that, please do. Let's get into the meat and potatoes. It's time to stop shuffling around. Trump has shaken things up and people are suffering. If you go out into the world, people are making jokes about how their 401k and their retirements are getting hit hard. Okay, that's red flag number one. Number two, all of these reports that are coming out are lagging data. Okay, are reporting data from before all of this nonsense. But it's finally starting. Consumer confidence is at its lows that rival the pandemic. Companies are lowering their guidance. You're seeing that through earning seasons, and economic data is slowly turning bad. Okay, these are the cracks in the dam. Okay, now you're starting to see on all these news shows talking about a recession. Okay, if you are flying an airplane and you see a big mountain right in front of you, the more you look at that mountain, you can look this up. The more you look at that mountain, the more likely it is that you are going to crash into it. It is a self-fulfilling prophecy. If you have regular people talking about a recession, they are going to create the conditions that lead to a recession. If you have someone who is scared of and is fearful of a recession, they are going to change their habits in preparation of a recession. And it's funny because those preparations will lead to a recession. Now, are recessions a bad thing? No. It forces companies that made a bunch of money and that are over bloated to really go back to the drawing board and realize consumers are not paying ridiculous amounts of money to them just because. You actually have to convince consumers again to give you their money because they're in recession mode. They're not giving you their money. They're scared. They don't want to give you the money. You have to truly change and truly give value to the world to get out of a recession. So it forces these companies to actually be better, which helps everyone in the long run. That's how this cycle works. You have a recession where people go back to the drawing board, they realize that they've made mistakes, people are fearful, and they have to think about, okay, how can we actually change the world? Then all that hard work pays off, and you start getting you get to reap the benefits of the labor. And then everyone does this, you celebrate a little bit too much, right? You party a little bit too hard and then you get a hangover and then you're like, wait a minute, I shouldn't have been spending all this money. I'm going to go back to the drawing board. And that leads to, it's just a cycle over and over and over again. So are we out of the woods yet? We've seen a rally. The S&P 500, this went under $400. You can see right here. And now it's about here. This all happened in 3 months. Are we going to start going back to this way this year? Maybe. Is it incredibly likely? Mm-mm. I don't think so. I don't think we're going to go back all the way down to here, but I think we're going to go right here. And if that were to happen, this is going to skyrocket in value. If we don't, and this goes back up, this is 40% of my portfolio going up. This will cut in half, which is only $150, and we would have made more. It's all about protecting yourself. It's all about protecting yourself. What is the best way to make money? You want to win 70% of the time, and you always want to think, what is the worst thing that can happen? Always think about that. We will check and see. I will keep an eye on this. Listen to my philosophy and let me know what you think. Okay, I want to build a community. I'm not perfect. I've done well. I've found a system that works for me, but there are people that make way more money than me. And I would love to talk to those people. So I would like to use this platform to try and communicate with people because the people I talk to in everyday to day life, they don't care about this stuff. So I would like to attract people that care about that stuff, that want to talk about it. I want to meet someone who makes more money than me because I'm looking on YouTube and there's no way these people are making money. There's no way Meet Kevin is making money. I don't know. Could be wrong. I'll keep you updated. Thank you for watching. I'll talk to you later.